Welcome to today's tutorial brought to you by To The Tick, and today's subject is the Head and Shoulders bottom. I am offering a textbook video today on this subject, and we're going to have one also on the Head and Shoulders top, but I want you to know that I am adding a video to our library specifically to cover all the interesting nuances with this pattern. Head and Shoulders patterns are powerful and reliable reversal patterns, and they appear usually in large basing periods, but they can happen in small charts. They're easy to see, they're common, they're very reliable, and therefore they're really a trader favorite. And I think we need to look at a lot of the different nuances and options that they can present. So I am going to do another video on that, and you'll find that on the website in the library. Perfect looking reversal pattern, and we're going to do it in a very speedy bar by bar sequence, just like we would if we were watching it live time in the market. You'll notice that we have to have a trend to have a reversal, and in the case of a Head and Shoulders bottom, it is a bullish reversal pattern, and what we're looking at is a bear trend in the background that we're trying to reverse. So the first thing we have to do is come in and find a swing low where there's enough buyers to step in and establish some support. Now, what does that mean? It means that there's enough buyers to stop the decline of price. That is the basic definition of support. You don't know, are they just taking profits? Are they buying to cover their short trades? Or are they genuinely interested in turning this around and becoming potentially a long trader? Now again, the nuances, do you have something here in the background helping you with decision? We're going to look at the textbook example just of this pattern. And the first thing we get is that swing low. We watch that price action hit that swing high. You'll notice it was a big push bar, and then it closed down on that bar. We've now established resistance, meaning there were enough sellers to stop the advance, and there's enough buyers to hold up the support. And very early on, we can outline this pattern. For me, this is the method of which I use to outline all my reversal patterns. I look for that rectangle. And then inside that rectangle, I look for where is that message going on, what I call the muddy trench between the buyers and sellers. Where are they fighting over prices? In other words, those trying to sell are trying to keep the price low. Right? They're trying to sell and get a real good price for what they've done on their short trades. Those that are buying are pushing the price above a certain limit. Well, why would they be doing that? If they could get it at the bargain basement price down here on the bottom, why would they be buying in the middle? Well, because those elephants cannot hide from you. And this is the first effort in the pattern to actually stop that picture of declining, declining, declining. You don't know that they're through yet on this low. You have no idea at this moment in time. So the best trade at this moment in time is to be looking to join that trend as a bear and to be looking for a short trade set up in your rectangle, looking for your first target, the muddy trench that they're fighting over, and then your second target would be the effort on the low. Prove something. They have proven nothing about the downtrend being completed at this point. But notice from a very early standpoint, looking at a reversal pattern, trying to outline where you get that battleground, that duel between buyers and sellers, that very quickly you establish a support, prove it or not. You establish a resistance, prove it or not. You have no confirmed reversal. Okay? You're a counter trend trader maybe, but no confirmed reversal of trend until the breakout not only happens, but holds. Then you're looking to target that great big red line, and that represents equaling what you're seeing in your bottom reverse. Trader nuance, whether you want to take all the little spiky things on both sides or whether you want to kind of get into the meat of the price action. If we actually get a head and shoulders, this will become a potential shoulder, and something's going to get lower, right? Are we going to get a double bottom? Can they even get through the muddy trench? And this ends up looking like a great big V reversal. The point is, all the reversals fit the same category. First swing low, first swing high, get yourself a picture of the battleground. Okay, now as we see that that first swing high gets that failed effort, they do fight over the trench, and now we got a head. We're talking today about the head and shoulders bottom in that textbook perfect picture. We want to see it break that first low. Notice swing low can't be set anymore. Is it a head or not? We don't know on this bar, do we? We have to have some buying happen to get us back inside the box. Without that, we're looking at this breaking down. So the buyers have to step in, and they also have to step in enough to come back inside the box. Come back above that low. Come back above where you turned here. Show me an effort back to the middle. Buyers, step in. Step in, buyers. And sellers, run out of gas. And that's what we're looking for at that moment in time. We have a legitimate second effort on our reverse pattern, and we're coming for our second effort on the reverse on the top. Now, classic textbook says connect the dots. Swing high 1, swing high 2. If it is swing high, is it a breakout? Is this just a double bottom and this is now the breakout? We don't know it's a head and shoulders yet, right? Everybody is going to be looking to take profits if they're long, if it can't get through here. And somebody's going to be looking to smashing it if they want to still come down with the pattern. Show us back to the middle. If you can't get through this, who wins the middle? If you can't win the middle, who wins the bottom? And it's a stair-step process. And from this point, all along, you're still aware of the pattern. Second effort pushes back through the muddy trench. Now we're on third time's the charm. You either make it or you don't. Prove it to us, bears and bulls. Who's gonna be in control? Perfect picture. We look for this price to equal the first swing low. Perfect picture. Doesn't always happen, right? And perfect picture. Everything stops in volume right here, and we can see a big surge out of the bulls and a total picture of control. They surge and break through and break through and break through. Picture perfect. Third time's the charm. It took 3 efforts on both sides. Okay? There are actually 4 trade entry options here. There are 3 in the textbook. I'm going to offer you a 4th. Number 1 and most aggressive is trying to find a place to get in on that third effort. Once you actually see the buyers take total control there, you want to join the party. Realize they still have to prove something on the metal trench, and that is your first target, that muddy trench. Stop placement here. Either take out that lowest low on the head or something right below that, but keep it tight. Okay? Be prepared for that dumping thrust of volume right before the buyers step in and scoop them and go really strong on you. Happens a lot. They come down there in order to get out and flush out the supply. The next option for a trade is the LAV method, and that's let number 3 happen. Let it be in my background, and then show me where the bulls take over the muddy trench. Once the bulls have established that muddy trench effort, they get through it, and they hold right here, jump in it for all it's worth. And again, it's about the volume. Surging, and then classic textbook way to take it is with the breakout. Personally, my least favorite, because you're looking for the swing high price. Now, option number 4, most conservative, and yet I like this one when you can get it. Let it break out and then pull back to that breakout line, that swing high price area, whether it's your neckline that you've drawn and whichever that neckline looks like. And again, remember, it's about the price range here. If you have an opportunity to see an advantage in the pattern, then take the trade. If not, don't take the trade. But if they hold the breakout, then you're looking for it to confirm. And that is option number 4, the stop placement immediately below the resistance. And all along this path, watch for that thrusting volume in order to get down whatever they can, get that price under control before we go crazy and go long again. But that's what you want in a perfect head and shoulders bottom. So let's go through and do our little summation here very quickly. First and foremost, sometimes it is called an inverted head and shoulders on the bottom side, just because it's a head and shoulders and you turn it upside down. Note, you must have a trend in the background, and in this case we've got a bearish trend background. That first push to the new low, buyers step in, there's a big pause. That volume, are they buying cover? How strong is that volume? Can you establish your muddy trench? Where is that area of negotiation? Where do you spend time kind of going sideways? Again, time and symmetry of these patterns is very important. That swing high to low spread and your reverse rectangle that you can clearly see, that becomes your target, and you can see it early on, as long as you're watching and paying attention to where those measurement guidelines are with where the real action is. Put that stop limit just under each of these entry options. The most aggressive on that right shoulder, low, swing low right shoulder, number 3 effort. Lav's method, wait for that to happen, then come in looking for who controls the muddy trench. Once the bulls control it, go for it. Number 3, that classic breakout. Realize that if you went for option number 1 or number 2, you're liable to have to take some profits once you get that breakout, because it might not just run straight up. You know, you got to take some profits along each one of those swings, and then you're looking for the conservative entry once the breakout happens and it pulls back, and that option may or may not happen. Each one of them, keep your stop tight. It is a reversal pattern. So I thank you very much. This has been brought to you today on the Head and Shoulders bottom from To The Tick. We have the video, text description, and chart examples, of course, on the website. I will have a Head and Shoulders tops separate video for a textbook, and I'm going to do one that combines them and do some nuances specifically for the Head and Shoulders pattern in the video library. So thank you very much. Join us again. Hope to see you again soon. Bye for now.